Hello everyone, and welcome to Hawkeye Traders. My name is Randy Lindsay. I'm host of today's live interactive session. I'm here to educate and inform you on the proper use of Hawkeye on the live edge of the market. If you have any questions or comments, over here on the right-hand side of your GoToWebinar control panel is a questions pane. Please enter your questions or comments there. I'll be more than glad to get to them in the order that they are received. I want to remind everyone that we are here for educational purposes only. That Hawkeye Traders is not a registered trading advisor, so we cannot tell you what to buy, what to sell. We can't give you any specific advice about your account. You need to use common sense. Make sure that you get advice from a competent financial advisor before you invest any of your money in any of these financial instruments. Past performance is not indicative of any future results that we show here. Make sure you understand that there is a large potential for reward in trading these markets. But there's also a large potential for risk. You have to understand the risks and be willing to accept them in order to trade in any of the futures, forex, stocks, options, or commodities markets that we show during this broadcast. Make sure that you don't trade with money that you cannot afford to lose, and never ever trade in a live trading account until you have first proven you can consistently and profitably trade in a simulated account. And only then are you able to tackle the arduous task of trading live money in a live account, because it's a real mind game. You've probably noticed in your own trading that trading in a simulated account, somehow it's just hard to get your mind in gear. But when you trade with live money, that's all you think about. So trading, the mind game, is always something to tackle. That's why you can't just do things in only simulated accounts. So when you transition, make sure that you already have a proven trading plan and that you can rigorously follow it. Then and only then can you start putting live money in. Start small, build yourself up as you gain confidence in your system, in your trading plan. Then you'll do quite well. Then you reward yourselves later on by building your base, building your account size, and so forth. Good morning, everyone. Nahid, David, John, thank you for joining me this morning. Appreciate your kind welcomes. I'm going to start off this morning with a very, very brief overview of my journey through crude oil this morning. And I wanted to show you, based upon the 6 ways the market moves, how several signals that came, it kept me safe, and how Hawkeye kept me out of the marginal trades, but how it got me into the trades that gave me bank. So let's very quickly walk through that. I'm going to focus my attention here on a 3-minute chart of crude oil. It's set up at 6 o'clock this morning, so I want you to be able to see basically how I walked through the trade and how things were set up for me this morning. So as time started punching on, I can see that there's extremely low volume. We've already had a nice downtrend from just after the European Open, and I can see that it's starting to consolidate. So that's what I'm looking at right now. As the price action continues to go sideways, I know and understand from the 6 ways the market moves that we are in a downtrend, but now since the trend dots are going sideways, I'm waiting for a close greater than the trend dot because we are in a downtrend. I haven't gotten that yet, but the trend dots have gone sideways. So this is still a trend down pause condition. And so I'm waiting for that. Okay, there's a close down. Okay, so I am still waiting for this to give me a nice consolidated pivot. All right, so there's the first close above. My trend dots are all still very flat. So there is my congestion. I'm looking for my previous pivots, high and low. So here's my pivot high right there. So what I'm going to do is I'm going to draw me a horizontal line there just to show you kind of what we're looking at. And prior low would be right here. So there is my congestion range that I was using this morning. This bar right here had just painted. You usually would look for that, but I didn't want it to put it so close to price. So I put my congestion range based upon the prior pivot high and the prior phantom low. Okay, so congestion entrance now has been put here, so I'm looking for that as my range. Now this is giving me pivot high and pivot low, so this is going to be defining my high. I have predefined it as this one right now for now. So let's continue to walk through this trade. So I'm in congestion entrance. I'm letting the trade kind of walk me through. I'm waiting for a signal to get me either long or short in this market. Okay. But if I'm in congestion, there's one signal right there. Roadkill is telling me that the second time frame has aligned and I'm looking for an entry long. But my second time frame volume is saying I'm not quite ready and I'm extremely low on volume still. So this is not an entry. I will wait. Okay, I get a continuation. Volume is still not good. All right, now price comes up to my pivot high range, but it pulls back, volume's coming in, trend starts to change. So you can see that it just really wasn't ready. So I'm feeling pretty good that I didn't enter that trade right now. Let's continue to walk this trade through. It came right back down. It closed under the trend dot. Let me blow that up just so you can see it. If you're straining to see on that, you can see that those trend dots have gone flat. You can see the close is under the trend dot. So yeah, I've entered back into congestion again. So I really haven't gotten back out of it. You can see prior high and prior lows here. I really haven't exited from my initial congestion yet. So I'm still in congestion, but here this is just another validation of just going in and out of that same exit. And here we go. Here's a full double dot signal where that's telling me that my second time frame volume has come back in line with my volume of my fast time frame, and my third time frame volume has aligned. You can see that the momentum has slowed enough to turn second time frame dark. So the roadkill is telling me right here, this is everything I need to enter the trade long. However, 6 ways market moves is sitting here telling me, Randy, this is premature because you're still in congestion. You have not broken out of your congestion range. I have a rule in my trading plan that even if I have a valid entry signal, I cannot enter a new trade if I'm in congestion based upon the 6 ways. So I chose to negate or neglect this signal as well. So no entry. If the trade takes off, then it takes off without me. That's just the way it goes. That's the way trading is. Those are the decisions you always be faced with. Okay. All right, there's a pivot high. We understand, okay, that normally doesn't paint until this bar closes. So now I would be just seeing that. So since I have a new pivot high, I can move my outer range down because I can always adjust to new pivots, but I cannot adjust to phantoms. This was a phantom. This is a true isolated high. So I can adjust my high range to that a new isolated high or low. Okay, price is still ranging around. I'm still in my congestion range right now. I'm waiting for a valid break below, confirmed signal to go short, or a valid break above and a confirmed signal to go long. I'm not trying to guess where the market's going to go. So I'm just using my signals to help me to do that. I'm starting to get an increase in volume here. The volume is looking short on the short side, but my third time frame volume is still very much long, and I'm still in a long trend on my signal. So right now I'm getting conflicting signals. All right, there's my first signal. It says close below the Hawkeye stop, so it's giving me a red trend dot. I have very good red volume and I have a bright red heat map. Looks like I have bright red heat map on second time frame and red volume, but third time frame volume is still saying no go, Joe. I can't really do that. So this is not a go signal for me. Let me expand that just a little bit there. Right. That's a no signal for me also because I can't confirm my third time frame. Also, I am still in my congestion range, so I need to see a valid break of that congestion zone. Yes, there is a pivot low here. This isolated low right here can and probably should have been moved to that pivot low. Thank you for pointing that out. So that is a new shortened congestion range. All right. So No entry yet. I'm still waiting for a very nice confirmed Hawkeye entry. Okay, volume is starting to turn back again. You still have a short heat map. Trend is down already. It tried to go up and now it's starting to show it's trying to go back down again. And as we walk through this trade, I'm getting another confirmed trend roadkill entry where the longer term and shorter term trends have aligned, but the volume still are not in line with that. So no entry. Just because you get a signal does not mean it confirms or validates the entry. It's just showing that the setup is there. Are you going to take that? I say, no, I'm not going to take that. Again, we're walking through the 6 ways the market moves. We're understanding how entry signals affect our trade decisions and how we follow our trade plan based upon the 6 ways. Okay, there's a red volume. Volumes come back in line again, but third time frame volume is still very much green, and I'm getting extremely low volume on that. So I know that if I'm going to continue to go down, I'm expecting to see much larger volume than this, not extremely low volume, because I know the market will not continue to go down on extremely low volume. Okay, still neutral volume. We're in a downtrend. Neutral volume, red volume, green volume. So everything's conflicted. No entry yet. So here, it's been an hour and a half since I sat down at my desk to look at this trade and this trade setup. Patience also is key. If you're not already looking for something else, a lot of people would have just gotten bored with this trade and gone off and started doing something else. All right. So if you're sticking with the trade and you're watching it develop and you think that the trade has merit, then absolutely. When you see at the specific time of the trade that maybe you're getting overbought or oversold conditions, then maybe this is worth the wait. So we'll continue to watch this. Here we go. Now we see a valid entry signal to go short. We got a double dot sell signal with red volume on my third time frame, red volume on second, everything lined. Perfect entry right here. However, I am still in congestion. I can't take that trade, even though I got a nice perfect alignment. Volume is already starting to rise. This looks good. I cannot take this signal because it has not broken from my congestion range yet. So continue to wait. Continue to wait. All right, volume is starting to show a preference now, but longer term is still red. The trend and momentum is still red, and our trend dots are still red. So this now has shown us that the market is starting to turn back again. Okay, here the trend dots have reversed, and we have closed above the trend dot. All right, so we are still in congestion. These did not go flat. They did actually start to rise, but this pivot point here, I mean, the trend dot didn't go greater than the previous 3 trend dots. So that's not a reversal. And neither is the next one. You need to have a trend dot that is greater than the previous 3 trend dots in order for a valid reversal signal. Okay. However, we are starting to see volume come in, and it's starting to build in that direction. So we'll see. This is basically coming right back into our congestion channel. So we'll just wait and see how that continues to build up. 7:30. I still have plenty of time before the market opens if trade is given. Okay, there's a new pivot low. So now I can take and move my lower channel up. You can always contract your congestion channel, but you can never expand it. So we're waiting for that. Okay, so now actually I wouldn't see that until after the next bar anyway. So backstepping this now. Once this bar closes, now I'll be able to see that, and I would move my pivot, my low channel up to that pivot. So now I'm looking for any break above or any break below these ranges in order to have a valid entry. Okay. All right. Well, there is a first break. Here is a green trend dot, a close above my upper congestion channel. I have a valid green trend dot on all of my time frames, and I have some really good confirming volume. That is a good signal entry. So That was my signal bar. The next bar is my entry bar. So it's at this point that I put my levels on and I initiate my trade, is at the open of this bar right here. So you enter the bar anywhere on this bar that it presents itself. And I like to set my stop up so that I'm approximately at least 2 ATRs from price or at least halfway to the stops. Okay, so this looked like it was right at the low of the previous bar. This is a little bit close to price. Um, I would leave it there. You set your stops initially at the Hawkeye stop until you can get your levels on, and then you adjust your level stops to that. Okay. I hope everyone's following me on this because this is the evolution of a trade. This is how I decided to go into the trade and the timing of the trade and why I chose this particular one. Because you see I had a couple of signals, a signal long here and a signal short here, but I did not take those, and I wanted you to understand why and how the 6 ways a market moves coupled with our trade plan analysis will help us to stay out of trades that would lead nowhere, but get us into trades that potentially have better results. This one has extremely good volume, a nice build of volume coming up into that. That's what I always try to point out, is that volume really leads the way. I want to show that leading up into it, and I got a volume dot on that one, which shows a significantly high volume for that time of day. And I've got dots that show alignment of not only my second, but my third time frames all at the same time. All right. So here the trade is initiated. I'm looking for at least a 3 to 1 risk reward. So with my risk limited to this amount, I'm looking for 1, 2, or 3 profit target. So this is what I'm looking for. So when I take these trades, I'm looking for a touch of the Hawkeye level 3 or a close at or above that third ATR level in order to exit the trade. So again, I automatically have my exits set in, but I'm going to set this exit so that it, we got 2 of them there now. I'm going to do a 63.73, okay? I got a couple of ones there, okay? So this will be my take profit point and my stop. Since I don't need my congestion range anymore, I'm going to move this right here to my stop value, and I'm going to get rid of that one. All right, let's hurry up and walk through this trade. I just want to show you how this trade progresses. If you understand the level rules are defined in the user's guide. So if you use the levels, it helps you to see that. These are based upon average true range. So we're looking at the ATRs of price coming up into that at the beginning of this trade. And then each one of these levels are fixed on an ATR range. So you can see that the first number, and I'll blow that up for you so you can see that. First value we're looking at is a 63.60 based upon a 63.53 entry. So that's about 7 ticks. So each level is about 7 ticks, okay, in price. So I'm looking at about 20 ticks of profit based upon my initial target. It's actually going to be 21, but based upon the entry price, it's looks like an exact 20. So it's off just a little bit, but that's okay. So risking 7 ticks to get 20 ticks, I'm getting about a 3 to 1 risk reward. Okay. I always set my target to exit 1 tick below the level because I want it to fill. So price has to go through your target in order for it to fill. If it just touches it, it usually doesn't. So 1 tick before that is a safe place to put that to give you a higher probability of fill price on the actual fills. And same thing with your stop. I like to set my stop to be 1 tick at or below the current stop because it still has to push through and fill. Ideally, you want to see a close below your stop, but in real life, you have to have a stop somewhere. So I put the stop usually right on top of the stop so that it has to push through it in order to fill it, and it usually does. So So as we continue to push through this, I always want to keep my stop 2 levels behind the current price, or the Hawkeye stop, whichever is closer. So right now this is closer to price. I'll go ahead and hold that there. Okay, price is still coming up. It's kind of bouncing around my entry point. That's okay. Oh boy. Well, there's a really nice volume bar. Look at that thing. Pushing price, very responsive price action. Price came back up and closed just above a Hawkeye level 2. So now that tells me I can go ahead and move my stop to break even. Okay, plus 1 tick. Break even plus 1 tick pays for the trade, pays for my commissions, and it gives me a no loss setup. So now I can continue to allow this trade to try to move to my level. If it doesn't, then I know that I'm going to get out at least with the break even trade. And as if the trade continues, then maybe I'll make some money on it. A lot of people are very happy with a level 2 trade. So when you trade, you have to have a defined profit target in order to exit. In the current market condition, I do move my exit points either between levels 2 or levels 3, but right now in the current condition, I am looking for a good 3 ATR level profit targets. Now these ATRs are based upon the current price coming up into this trade, so you can set your levels to be whatever that you want. Right now I have it set at 2 ATRs. So each one of these levels are 2 ATR. So I'm actually getting a 6 ATR profit target. ATR 10? No, this is ATR level 3. And each one of these ATRs are 2 ATR in size. So let me see. I'm trying to go through as a question, make sure I don't get too far behind. Marcel wants to know, is there a way to get the lines for the pivots once they're turn them on to stay when you refresh your chart? Yeah, they should always stay on your charts when you turn them on and refresh them. The pivots have a toggle on them to turn them on, and then it'll always draw the last pivot lines automatically. So yes, so in this case, yes, it would have automatically drawn the lines for me. Let's continue to walk through the trade because I've got some other things I want to cover this morning as well. I want to make sure that you understand this. Now, continue to walk through this trade. The 6 ways kept me safe, kept me out of some spurious trades, got me into a trade that looks like has potential, but we'll see. This trade might or might not work out. You can see that price came to level 2 and is now starting to bounce back down again. It's come back down to a level 1. We're starting to see, based on 6 ways, we're still in a trend run because these close is still greater and the trend dots are still nice and linear and rising. But now you can see that the stops are starting to get really close to my 0 line, and they are also better than the original stop. So even if you were trailing with the automatic trailing stop, you can see that you're now in a very minimal risk condition based upon your current entry. So Hawkeye continues to minimize the risk in the trade while we're waiting for the trade to develop. Okay, now we're starting to see green volume come back in again. That's a good sign. We never closed below our first level, so we're waiting for that to possibly reverse back around again. Or if it drops back down, we're ready for that too. The stops have gone level, so let's see what the price does. The trend dots are still rising, so this is a pause, but if that trend dot goes flat, we will have entered back into congestion. So let's see if that occurs. Nope, the trend dot's still continuing to rise, but we are going to get right there a pivot high. We are going to get a pivot low. So it looks like the trend dots are starting to go flat. And no, actually they're still rising, even though they're still rising. So it's close. But I am starting to get clustered pivots. So anytime you get clustered pivots, then you know that you're starting to get into a congestion or at least a consolidation zone where price is starting to validate this as a valid base for operations, if you use that term. All right, yep, there's another one. So that's probably safe to say that we are getting very close to a congestion entrance. right there would be very valid point. This is congestion entrance. So now we've got our pivot highs here. So let me go ahead and put that back in again. See, that's an F6, so I'll put that right here. So a close below, this is our prior pivot high. Now we're waiting for a pivot low to form. So we'll continue. Okay. This bar closes, giving us a pivot low. So we'll paint that right there. So now we have a new congestion zone, pivot high, pivot low, inside of our trade. Now, does that say, Randy, you're in congestion, you need to exit your trade? No, that's not a rule. The rule is that if you're in congestion and you're in a trade, if the trade exits congestion, okay, against you, you exit the trade. But if the trade exits congestion in the direction you're going, you continue to hold. And those are the rules. All right. Price is just bouncing around within that consolidation range. It's continuing to stay. We're still in congestion. New congestion range here. All right, there's a close. Price closed up above level 2 again, and it closed outside of our upper congestion range. So now we have a congestion breakout and a continuation of a trend in the long, so we can get rid of these congestion lines. And these are 3-minute bars, so every 3 minutes you have plenty of time to do these adjustments and to monitor the trade and to make sure that your trade is going the direction that you want it to. Price continues to go. The trend dots are starting to rise again. So you are now in a new confirmed trend run up. Okay. Price is continuing to rise. Now your stops are starting to rise again because the trends are rising, the volume is rising. Okay, and it's confirming everything. Now you're even getting new re-entry signals to say, hey, well, that's a congestion breakout. Now you're starting to get realigned on all of your time frames. So these are places to either add to your existing trade or to get in if you hadn't gotten in before. Okay, prices continue to come up. Okay, there it touched. You can see that if you get really close, price came back up and hit and touched. So it touched the level, the ATR level, pushed through and actually filled on the previous level that I'd put. So one tick prior to that gave a fill price for push through. So if I get filled on a chart and bank some pips or some ticks, then I take my stop and move it up 2 levels prior to the previous. Now, the instructions and the rules that we publish show a close above level 3. And while that is always true, I can, as a trader, I can make exceptions to my own rules, and anybody can, that if you have a touch or greater of that level, then you can move your stop up. So in this case, I'm moving my stop up to a level 1, right at level 1, not 1 or below or above, just right at. And this will be my new stop because I'm keeping it 2 levels below the current price. So now if I've taken a partial profit on my trade, then this will be my final profit if it gets hit, or the Hawkeye stop, whichever is closer. Okay. I'm also starting to get close to the open of the market, so I know that at this point I don't want to be in the market when it opens unless I am very safe that the market is going to be moving either in my favor or not, because it could just come right down and give me a fill that might not trigger. It might trigger a order to fill, and then I get filled at a much lower price. So it's just not worth it. So I like to look at the time and consider to get out and to exit. So if I get this close, if I get this, great. If I get to this point before the market opens, then I'm just out of the trade anyway. Okay, their price goes through, double hits, validates that, and then boom, it automatically comes right back through, stops me out right here on this next bar. So you can see price pulled right back through, and so I was able to get first fill at a level 3 and then the rest off at a level 1. So that level 1 gave me 7 ticks and this level 3 gave me 20. So I was able to get 20 ticks on 2 contracts, and then I got 7 ticks on the remaining 3 contracts. So you can see how the trade continued to bull out. So I'm out of this trade at this point. So if I'm out of that trade, then I can just turn everything off. and reset to look for either a new trade, or since I know that the market's getting ready to open, then I just wait for that trade to go out. And then you can see how the trade continued to move out. It did push back up again. It went right back in line, but I was already out of that trade. Now, this condition of this trade was right here just prior to market open. I'm not going to take that trade. So I just sit back and wait for the market to go whatever it wants to do, because there's always just too much vibration at the open of the market. So I try not to hold any positions open through the open of the larger market session. Crude oil session opens, right at 9 o'clock, but that's where we got the most of the volume coming in here. Um, so just need to look at that to see. So I thought that was instructional. As I was walking through that this morning, I just thought this would be a really great thing to share with the guys this morning. So I wanted to make sure you saw that and that you were able to walk through with me to see the setup, how I traded that, and how Hawkeye was able to keep me safe, how I used the rules to manage my trade to get me in, to get me a very nice profit, and to walk away without having to take any losses. Okay, now I'm going to look back at the questions to make sure I got everything answered and make sure that the values are set up right. So I got that one, Marcel. Uh, so you're on TradeStation, is that right, Marcel? If I was still in the trade and the market was getting ready to open, I would exit the trade wherever I'm at. I would just get out of the trade. I try to get the best price I could. So if I was getting really close to the market opening, and I was really, really close to my price targets, I'd go ahead and just exit anyway. Absolutely. Does my stop move to the new? Yes, I got that one. Yeah, any new pivot highs or lows, you're always going to be adjusting and moving your stop, not to isolated. Only to isolated, not to phantom. So announcements. Yeah, that's right. Any news announcements or anything, then if you know there's going to be a major news announcement coming, make sure that you're not in the markets for those either. It's really high risk. That's your decision, but I think it's just too much risk for what you're willing to take, unless you're basically gambling if you don't know what the news is. And if you don't have any way of protecting your trade, then um, you're not trading wisely. For example, what I mean by protecting a trade is if you're in a position, you have the ability to buy an option to hedge your position. So regardless of the event, you have a guaranteed exit price. That's what I mean. Otherwise, you're setting yourself up for failure. Okay, so that's how Hawkeye helps you to not only to enter but to manage and to hold through turbulence and noise, and to get in a trade that, while the trades look good, might not be the best trade, because we understand the 6 ways a market moves and how the market itself generates trades, directions, and how you can trade with them. So as a member of Hawkeye in the members area, you have access to the 6 ways the market moves teaching. It is a video and PowerPoint presentation that you can follow along, and to teach yourself how to do that. I want you to understand that. We also teach that at our live seminars, so make sure that you get your copy today and follow through with that teaching. All right, so let me go over to the other window here, because I wanted to answer Marcel's question. Now you were saying, let's pull up crude oil again just to see that. So you were saying about the pivots. So let me go on this chart and format my analysis technique. Let me go to my Hawkeye pivots. Okay, and extension line, and then the color, and then show them. Right now I'm false, so I'll set that to true. Zero means max length, so you can define how long you want it to go, or just keep it at zero and it'll go all the way across the screen. All right, so I'll go ahead and define that as on, so you can see that they turn on. So you're saying that when you refresh the screen, so if I were to like go to another symbol then, like the YM, see, they still redraw, and if you go back again, they should still be redrawing. So whatever chart you're on, it should redraw and stay on the chart and continue, and it'll always paint the previous two pivots. So as the pivots expand, it will also expand, but that does not follow our rules. So make sure that you understand that. But most of the time it does follow the rules. So this is a pretty good indication of some good channels to stay in or stay away from, and how to trade with those. So the pivots are part of our starter package, and one of the more valuable tools that we do offer. The pivots show 3 to 5 price bar reversal points that we're expecting price to consolidate. We can draw consolidation channels, we can draw trend line channels, and so they're very good and useful tools to use. Okay, close the workspace and open it again. Okay, so make sure that it's saved. Okay, so all of my settings are saved. So if I were to save that workspace, let me go ahead and close that workspace then. Okay, now I'll open it back up again. And there they are. So that's the way it should behave. If it's not behaving that way, then you might need to look at your data. If your cache might be corrupted, or maybe somehow your indicators themselves might be corrupted. Not quite sure, but it might be worth looking into that. It should not not draw. John, thank you very much. Uh, what were your time frames on the volume bars below the candle charts? Okay, so I'll go back over to Ninja to show you that, since that was the one I walked through. All right, if you can, as you can see, the crude oil, the main chart I traded from was a 3-minute chart. Because at Hawkeye we use harmonic time frames, I will always use integer multiples of this base time frame. That is a 3-minute, so my second time frame chart is a 6-minute. And my third time frame chart is a 12-minute. So 12 is 4 times 3. It is also 2 times 6. So you can see all of these are integer multiples of my base time and harmonic to one another. I set up my roadkills here based upon that same sequence. So my first roadkill, if you look at the setup on it, it's set up to be a 6-minute. So I'm looking at the trend and volume of my 6-minute chart. So here's my 6-minute chart right here. See these trend dots right here? These trend dots are these trend dots right here. This volume right here is this volume right here. So the roadkill is such a useful tool. It shows me on my fast chart what my slow charts are doing. And it gives me a signal when those slow charts align in the direction of my current price. Okay, this bar right here, it looks like this one right here, they're both heat maps. However, this one is a higher time frame heat map. It's called heat map HT. And it gives me the ability to set the time frame of the slow bar to be whatever I like. So in this case, I'm looking on my 3-minute chart, I'm looking at a 6-minute heat map. Okay, so that 6-minute heat map is this heat map right here off of my 6-minute chart. I'm just replicating it on my 3-minute chart. So it also gives me the ability to see when alignment occurs and when I can see the momentum of the longer time frame weakening. And then here's the second instance of my roadkill. I have it on my chart. Notice I don't have the trend dots showing. So when I format this, you can see that I have a 12-minute trend and volume showing, but you can see that my volume indicator is turned on, but my trend indicator is turned off. So that way I'm not cluttering my screen with a bunch of dots. I don't really care what the trend is on this. I mainly care what the volume is doing. If the volume is aligned with this volume, because volume leads the way. When we see buying volume coming in, we know the market's going to be going up. If we see selling volume coming in, we know the market's going to be going down. So when we see the longer term, midterm, and short term all agree, then that tells us the direction of the market to take. It gives us a higher probability that the trade will end positive in our favor. That's the whole idea behind it. Make sense? So that's the indicators that are on this chart and how we use them. So if you wanted to, you could look at the chart by itself without having to reference the longer time frames, because that will help you to have a little bit more real estate to spread things out a little bit more and to kind of look to see how it's all looking. Okay, so if you wanted to spread things out, you could get a little bit better look at it or not. So okay, John, did that explain everything? The actual candles themselves, yeah, these are painted. They're colored with the same color as the Hawkeye volume. So the indicator we use is the volume paint bar. So we paint the price action the same color as volume, so that way we know exactly what volume and price are doing at the same time. It's an invaluable tool. I'm so used to trading with it, I can't trade without it, because I love to be able to see volume leading the way up into a reaction. I love to see pivot highs and pivot lows that show me exactly where traders want to go. They're signaling their intent and where they want to push the price to. So to me, that's just invaluable. I love to be able to see that on the chart. You're welcome. You're very welcome. Okay, wow, that took about 45 minutes. Sorry I took so much time to explain that. And this is just you know a future. The crude oil is just one instrument to trade. I can do this exact same illustration on any of the other markets if I wanted to go through and and look at any of the forex markets or the futures markets, identifying a trade setup, looking at the conditions of the trade, following the 6 ways the market moves to keep me out of questionable trades, but to get me into nice trades. Those are those are really nice considerations to look at. So if you're following, let's see, the Euro Aussie looks good. Euro New Zealand looks good. Um, there it is. There's that Euro Aussie. Yeah, this is looking good for a possible reversal. You can see faster and slower time frames that had nice reversals coming up. So the Australian's starting to go down, the Euro's starting to build with strength. Okay, so you can see looking at the time frames, we just got an initial signal to go long, but again, heat map says this is premature. It's still got to set up. Volume has already signaled right here, and that's why I love this so much, that the directional intent, where it's going to go. Okay, you can even see on a 30-minute chart that the volume pushed down. I call this kind of like a big directional change. When you see price extending to new lows with opposing volume, then that's almost like saying, "Hey guys, I'm getting ready to go the opposite direction. Want to join me?" Then again, of course, you wait for the signal to come in. This is a 5-minute chart, so a 5, 15, 30-minute setup. So the signal just now starting to come in, but the momentum is not quite there yet. See right here, the trade momentum on the longer time frame just is still really strong down. So I'm waiting for that to confirm a direction. But overall, it looks really nice. If you look at the 45-minute chart as well, which is what you would ideally trade with the 15 anyway, you're seeing that you're getting some really nice build of strength and weakness coming off that pair. So that pair gives us a really good potential trade setup. So you can do the same type of analysis in forex and futures if you're looking at equities, even looking at trading equities, short term, medium term, long term. The conditions are still valid. You know, the monthly, we can see the monthly is in a trend run condition. We had a really nice gap up, but consolidation volume is telling you that this is a profit moment for Micron. So a lot of people are taking profits, but we still have not broken below the 40 level, which was where we gapped up to. So that is basically our support for now, but we're watching that. And you can see on the shorter term how price has stabilized at that, and we're just channeling now. We're just bouncing back and forth between congestion channels. And once we see these pivot highs or pivot lows breaking, then that will confirm direction. But right now, it was down, it's up, but now it's still right back into congestion again. And you can see the weekly chart is in congestion. So you can't take the trade based upon 6 ways, even if the signals are trying to show you one way or the other. So trade safe. Use the tools the way they're designed to be used, and you too can take trades with consistency and confidence. MT4, absolutely. Let me go back over to my other computer. I'll show the screen here. And let me pull up my MT4 platform. All right, those that trade MT4, you can see the same setups. So you can see where volume and price interact. You can use the same roadkill setups where you're looking for price to give you a signal to either enter, to continue, or to not. Okay, so the Fat Man shows you the build of strength or weakness in certain pairs. You can also move these around if you want to go longer. If you want to look at an H1 compared to an H4, and then you want to trade off of those charts. If so that I wanted to trade an H1, I want to look at an H4 setup, and then I wanted to look at that relative to a daily chart. Then it's really easy to be able to see and to identify those. Say you want to change to a different currency. Well, then you can look at that currency also and see, okay, the real bullishness in euro, is it over or not? You know, the continuation volume is saying that we've got a potential reversal in process on that euro. So can that euro continue to go up? We're very, very bullish, but this is showing some pretty strong aggressive price action. So don't guess where price is going to go. Use this to help you to make an informed trade decision and allow Hawkeye to safely help you to enter the trade and to manage that trade in a safe and profitable way. So daily charts, and then from that point you can push back down into faster time frames to see how that trade is starting to develop. Okay, so all of the pushes up still have been with strength, but then prices come back after that. So these we consider exhaustion bars, because when you see extremely large range volume that are twice the average true range shown by the purple bar here, okay, that wide bar, 90% of the time price will always suck back into the body and at the midpoint of that wide bar. And once price breaks the body of the wide bar, then it shows the directional intent of the market. So this one showed that it was breaking and going down based upon the wide bar rules. Okay, so we have all of our wide bar rules available in the members area as well. So, and then if you're trading faster time frames, then continue to stair step down into the faster time frames, 30 minutes and hourly, 15, 30, 60, and then you pull these right back to 30 minutes, and then you'll pull this one back to an hour. And then you can still see that now. And based upon the hour and the 30 minutes, you can see the euro is starting to base and come out of an oversold condition, while the Australian and New Zealand both are coming from strength trending weak. And this is coming from weakness trending to strength. And so we're looking at potentials for reversal. Now 15-minute, the 30-minute, the 60-minute haven't shown that, but you know that on the overall trend based on the daily chart, you know, you are in a very bullish condition on the euro. and but we're starting to see some signs of weakness coming in. So based on that, then shorter term, you're starting to trend down and not up. So anytime you get a long move, it's good in the direction of the long-term trend, but right now your longer term is an hour if you're trading the 15. So that hourly chart is down. Right now it's starting to show volume up. Right now you've got no trade setups. So there's really no trade setup that you're looking at to get into this right now. However, if you're looking at that Euro Aussie or possibly the Euro New Zealand, that might be another case. Okay. So we're looking for potential long setup based upon 15, 30, 60 minutes. We can go faster on the Fat Man. If you wanted to go a little faster, if I want to trade a 5-minute chart, then 3 times 5 is a 15 minute, so I'll pull a 15-minute. Okay, Fat Man in here. See the difference between the 30 and the 15? Okay, so it looks like some news has come in that's affecting the Canadian. So that might be one to look at. And then the hourly, I would move it down to a 30-minute. So I'm looking for 15 to 30 time frames, trading off of a 5, using a 5, 15, and 30-minute setup. I went through that really quickly, but I want you to always see that we're trading using harmonics. So if my base or fastest time frame, whatever it might be, I'm always going to be looking at an integer multiple of higher time frames which match or are harmonic to this. I hope that makes sense. Are there any other questions? Now, if you don't have all the Hawkeye tools to be able to do this, to be able to analyze your trades like I do, well, you can still use the Hawkeye volume itself. If you're just looking straight at Hawkeye volume all by itself, right, then you can still see you still have all the same meat behind the trade. You still have the volume radar, you still have the volume paint bar, and the pivots and the wide bars there to help you along. So let me pull this one back to the same one we were just looking at. So based upon the price action, you can still see the really key reversal points in the pivot areas that you're identifying trend direction and identifying profit points. And then use the normal tools that you always use. If you're using trend lines or moving averages or MACDs, I think I have some examples of those over here. Let me see. Yeah, here we go. So if you're still using those here's some examples of using trend lines or a MACD. You can use stochastics or Bollinger Bands, um, moving averages. So whatever gives you a entry signal, use the volume with a entry signal because not only will it lead up into the signal itself and show you that, okay, volume is building. We're starting to see a lot of selling volume coming into that. So when your signal does come a crossover, okay, into bearishness or a fast cross of your slow average, or if you can see a trend line up that was broken, when you see confirming selling volume, that confirms that as a directional trade. You want volume to be in your favor. So a great way to get started with Hawkeye is by getting the Hawkeye starter package, where you are able to get all 5 of these indicators: the Hawkeye volume radar, the volume paint bar, the pivots, and the wide bars, the purple bars. All 5 of those are part of the same package, and it's only 97 bucks. Let me give you a link for that right now. So if you haven't gotten started, you can, and I will put it there in the chat area. So there, I just sent it to you as a little chat message. So that way you can get a copy of the Hawkeye Volume Starter Package yourself and start applying it into your charts. It's a lifetime license, so you don't have to worry about it going away anywhere. There's no monthly cost or subscription you have to pay. So apply it to your charts. It's good on TradeStation, NinjaTrader, MetaTrader 4, TradingView. It's a it's available on most of the platforms as well. So if you have any questions about that, let me know. I'll be more than glad to help get you started. And I'm about out of time. Does anyone else have any other questions for me? Any analysis that you would like me to do on a specific market? Any directional changes? Just let me know. I'll be more than glad to look at that. Hey, Philip. On TradeStation, can you please show the gearbox settings for today? I will do that. You're looking for the ES, the YM, okay. The ES I've got right here. The settings for today are 607, 1214, 2428, and 4856. Make sure that the gearbox is set. Here are the settings that you would use. Format the symbol. And make sure the symbol is set to 405 minutes. And make sure that you're using the ES.D symbol. This is a continuous contract. It's not tradable, but it shows you the continuous. You never have to change it or update it. And the session, always use session hours for building, and for your session time, just use the regular session because you're using the .D. It's only going to use the pit trade session only. Okay. I don't have the YM, but I do have CL here. The YM is going to use the exact same settings. So if you have it set up the same way, then the numbers that you get for the YM are going to be the same. I might be able to do that real quick, actually. Let me pull this up here. Let me turn that off and then change this to a @ym.d. Okay, there. That's the YM. The YM is a 196, 392, 784, and a 1568. So that's the YM settings. Back to the ES. Because I need to make this a little bit bigger. There. All right, and CL. Crude oil, 394, 788, 1576, and 3152. The settings for crude oil, make sure that your symbol is formatted and set up to look at 330 minutes. That's the normal day using the continuous symbol. On session hours for building and on your properties, you have to define a crude oil session time because if you use standard hours, it'll pull up the Globex market. You don't want Globex. And you cannot use a .D for crude oil. They do not have that in TradeStation. So on your settings, make sure you define the hours for crude oil to be 9 a.m. to 2:30 p.m. Monday through Friday, because the session times are based on the exchange that's traded on. So it's on the New York Mercantile Exchange. See the NYMEX? So the NYMEX hours for crude are 9 a.m. to 2:30 p.m. That's where the majority of the pit volume all gets traded at. It trades 24/7 on the Globex, but this is where the bulk of the volume occurs. So that's where you want to set that to. Okay. Once that's set, then these values will give you good repeatable numbers. Got it? All right, you're welcome. All right, Gene wants me to look at the dollar yen. I'll be glad to do that. We've got several ways to look at it, fast, slow, long, short time frame, but I always like to look at the longer time frame first. So let me pull this up. I've got a 360, a 720, and a 1440 minute time frame. So looking at the US dollar Japanese yen, You can see on the longer term we are in a downtrend, so a lot of weakness there. You can see that the trend of the Japanese yen is definitely down. Okay, so it is still stronger than the US dollar. And if you look at the daily chart, you can see that the yen is trending with strength but rolling, and the dollar was trending with strength, but now it's starting to go weak. So this right here is for the past looks like 1, 2, 3, 4, 5 bars has been sideways and consolidating. And again, if you look at the daily chart, you can see we are coming down into lower side support. So this demand zone here is saying that we're looking for buyers starting to step in, and we're starting to actually see that on the volume bars, that we're starting to see buyers stepping into this range. So we might see that this trend does continue to go, and if that does continue, then this daily is going to start rolling back over, and the dollar then will start to roll back up with strength, and we're just starting to see that right here. So, but it's not quite ready yet. It looks like it's going to stay right here in this consolidation range, probably no greater than a 111.5, and probably down the low of that, which let me see if I can get that low here, right there around 110.20. So you're probably going to be ranging between 110.20 and 111.50 as a upper and lower range. A breakout of that longer term will give you a direction. So that's the long-term picture. But if you're trading it intraday, here if you're trading 15, 30, 60 minute based upon that dollar yen, okay, you can see that we're still sideways, congested, consolidated. We have multiple support and resistance ranges in this same area. All right. So again, 1120, 1150 looks like the upside resistance, and the downside we're looking for 110.20 to the low to break to get us any type of a direction to the downside. Okay. See that? So most of the support is right here. We've been in a downtrend, so you can see all of the um, supply zones. We don't have that many demand zones present. So right now, um, oops, it doesn't look like it's going to break out anytime soon. So we're just waiting for that to be confirmed. All right. If you use tick charts, then you're going to get the same picture. Whether you use tick charts or time charts, but these are going to be a little bit faster, but a little bit smoother in price. So looking at the US dollar, Japanese yen. For tick settings, today's tick settings, you've got a 496 and a 992 as your primary trades. So this 344 will change to a 496. A 496 tick chart says that each bar is about 3.7 minutes. So you're looking at a fairly fast time frame chart. And then this one will be a 992. And again, we're getting the same, about 7.5 minute chart. We're getting nice consolidation. We need to wait for a breakout and give us a clear direction on those. So overall, that's you're still going to get the exact same picture. 15 minutes, still showing you that you're kind of in fair value, but you still got a stronger yen. They're trending in the same direction. That means they're going to be sideways in price. You got it. Johans, is it possible for me to enter a trade using the scanner only for Tomahawk? Let me pull Tomahawk up real quick. I don't have it open, but let me open a desktop, and I've got my Tomahawk right there. While that's loading, it's always possible. You know, the tools are set up to have any of the tools to use as trade entry signals, but it's probably, I've not studied it to just only use the scanner. So if you do, I'd be more than grateful to if you share your results with me. But I use the scanner to help identify trends of strength and weakness. I always use the chart to tell me when to get in. So those are just rules that I have based upon that. So, you know, the scanner is going to sit here and tell you what is strong uh, what is weak, and it'll tell you where to take those. So if you're looking to take trades based on this, I've not really looked into it, but that doesn't mean it can't be done. So if you find a way or find a trade plan that helps you to identify when these start lighting up, and so if you're sitting here looking at the particular trades, like this second one here is the pound dollar. Oh, that's the looks like the yen dollar. And this one might be the pound. That's the euro. The first one's the pound. Then there it is. First one's the pound dollar. Then you can see it is in trend one. So there's the first trend dot. See it right there? The 1 minute is showing a one trend dot. It's in a neutral trend. Okay, right here. So you can see that the dollar is in trend against that on the 2 minute. Okay, the 3 minute, you can see that it's a little bit stronger. So you can see the longer time frames are in uptrend against the US dollar. Okay, longer trends are stronger, but the shorter trend isn't. So all of the top lines you can see are all the pound relative to that trade direction. The euro, however, is the strongest one. So looking at that euro US dollar, you can see that the trend and trade directions on from the longer term all the way down to the fastest time frame. When they trend down, you're not getting as responsive price, but anytime it gives you an up signal, then you're getting tradable entry signals. So that's the value and the beauty of the scanners that helps you to see that, and it helps you to trade those. The longer term is weak relative to the dollar, but the shorter term is extremely strong relative to all the other pairs. So even the Euro CAD, the Euro Aussie, even the Euro Pound are all strong relative to that Euro. So let me know, Johannes. I'd appreciate some feedback if you do see anything based purely on just the Tomahawk scanner. So let me pull up that Euro chart. Yeah, see all the Euros charts are trending strong and long because you can see that strength. So any trade breakouts that you have, like right here where you're looking at price consolidating and then coming right back up into a long trend, gets you into that trade long. You do the same thing with the other charts as well. So once you see that consolidation range break in the direction of the strength, then that gives you a trade entry. This one's not enterable because of the news and the noise that was on the Canadian, but the break and the others are all very, very clean and tradable. Okay? You're very welcome. You're welcome, Gene. You're welcome, Philip. David, could you quickly show me the latest Tomahawk screens on MT4? All right, let me switch back. Oh, no, I've got that right here. All right, so let me pull that up here. We were looking at the Euro, so I'm going to pull up the Euro 3 minute. There's a 1 minute. Pull up the Euro 1 minute, MT4 Tomahawk. You're welcome, Nahid. Well, Johan shared that he entered 4 trades today using only the scanner. And they were all profits, so congratulations. That's awesome. You're very welcome. I'm glad you're able to find that and to use it to your advantage. That's the whole basis of it, is to help you to see that. Now, if you want to share, I'd be more than willing. I'd be looking into that to see how you do that. But maybe that's your secret sauce. You know exactly how to use the scanner in a way we never knew. But thank you for sharing that. I appreciate it. It is a nice tool. No, there's not a scanner for MetaTrader 4 that I know of. It's nice to be able to see that. Right, this is the 1 minute. You may switch over to a 3 minute. Each one of these are saying one, but you can see that based upon the indicator, you got an M1 and an M3 and an M8. So you can cycle through those just to validate that they are set up properly. This can change to an M5 or an M1. Okay, M5, M1. You can change that one again also, make it an M5. Make sure it's properly doing it, an M1. And then this one you can set it to an M5 and back to an M1 as well. So make sure that everything looks good. All right. And then, of course, you can look at the 5-minute as well, or the 3-minute. Here are the 3-minute settings. Marcel says, should one be nervous about the big blue volume for your euro dollar on the 3-minute? Okay, well, let me look at that. Let me look at that. The big blue volume on the 3-minute. Oh, I just happen to have it right here. See that big blue volume? Should one be concerned about that? Possibly, yeah. If you look at the alignment of that, it's a large amount of volume that came in, but price really didn't go anywhere with that. It didn't go anywhere. So yeah, it's definitely an item of concern. If you are long in this trade and you see a big volume bar that opposes the direction of your trade, it's definitely an act of concern. But did it go into new price lows? No. It basically went right down to where prior support was. See the pivots? Okay, it's just basically retesting that. What's confirmed though, this push down is with buying volume. The very following bar gave us a nice pivot low off of that. So while it is definitely a concern, and it's a good eye on your part, it didn't result in anything. So yeah, it's definitely look at where the price is compared to your volume to see if that's going to give you anything, uh, any concern. It never hit your stop. It gave you a nice consolidation range, and then you got a nice breakout for a continuation. So yeah, it should not scare you out of the trade, especially if you're following the 6 ways as well. If you use that to take profits, that's perfectly fine. If you use that to exit your trade, that's perfectly fine. It's just not required. You're welcome. All right. Is that what you want to see, David? You trying to compare yours with mine? I am using Oanda, so the data might be a little bit different. The timing might be a little different, but overall, that's going to give you the same results. You should be able to see right now a very strong euro and a very weak Canadian, very weak New Zealand. So you can see resulting price action from all of them showing euro strength. The pound is starting to come back pretty strong. But against the euro, it's still weak. But against all the other ones, the pound is still strong. So if you look at the pound chart, you'll see probably some nice trends against the pound, against all the other signals relative to that. Um, keep going. There it is. Tomahawk pound. Good. Good. I'm glad it lined for you. Perfect. I've got a lot of stuff on this computer. All right, so looking at the pound, looks like I've got my window expanded just a little bit. Let me go to F11 just so I can see everything. Yeah, it's expanded out that way. Yeah, the pound is strong relative to all the other currencies. See it? It's trending up. The euro itself, the euro is trending up. See, so we should be seeing this trending down if the pound was strong. So You can see that because the euro is so strong, it's not strong against the pound, but the pound is strong against all the others. So you see nice uptrends of the pound relative to all the other currencies as well. So that's very quickly you can see that and identify that 1 minute, 2 minute, 3 minute, 15 minute, and 60 minute. So longer term, shorter term, and of course you can set those to be time frames that you like. So it helps you to be able to see and understand trend, trade direction, strength and weakness. All right, I'm going to go ahead and stop the recording at this point.